Let's discuss all this with a view on what's happening with the foreign exchanges. Let's have a look at the pound and the currency markets and do that in the company of Ray Farris. Ray is a global head of foreign exchange strategy at Credit Suisse. Ray, thanks for joining us. Well, what do you expect today? Do we get any noises out of the Bank of England which is going to affect what goes on with sterling?
Probably not. It's probably going to be deadly dull. As your previous speaker just said, it's really all about the February meeting. That's where they're going to have the new inflation report. They've made it very clear they want to take these big decisions about QE against the background of an inflation report. So we don't see any reason why they're doing anything special today.
So it continues to trade within a range, albeit a little slightly lower one than we saw for perhaps the mid part of last year?
Yeah, I mean, I think that the bias right now remains for sterling to be a bit weak. We still have a forecast of euro sterling going up to about 94. The problem is that the markets are sort of caught between some pressure on yields from supply, also the dynamics of how the dollar is trading itself. Euro sterling has recently tended to be quite directional with euro dollar. So I think we need to get past this non-farm payrolls number to let the market settle down their view on euro dollar, and then the bias probably going into the meeting will be a little bit softer sterling. But you're right, until the markets have a much stronger view about how BOE is going to trade that or make that decision, the likelihood is that sterling is going to be somewhat range-bound with a slight bias to weaken. Yeah,
as you mentioned, the big data point, non-farm payrolls, the employment report out of the US. What sort of number are you looking for? What's going to actually be positive for the dollar here, or do you think the dollar continues to pretty much be where it is, if not get a bit weaker?
Well, we're bearish on the dollar strategically. We're still looking for euro dollar to go back above 150 toward 153 in 3 months, 155 over the next year. Now, exactly where at the beginning of the year you enter that trade is going to depend on how U.S. rates trade this month. The NFP number today, or I should say on Friday, really has, you can think about it in 3 ways. If we get a weak NFP number, the market is going for essentially flat. That's the official consensus. I think consensus is probably a little bit above that. Then the dollar definitely weakens. U.S. rates rally. I think if we come in close to the consensus, our number is a +10 read. If we come in around there, probably you get a relief rally in U.S. bonds, and with that, the dollar weakens. We really need a strong number, I think, to help the dollar at this stage. We probably need something +40, +50, +60K to get a sell-off in the U.S. bond market, and with that, a rally in the dollar.
Ray, 5 seconds. What's your trade of the day?
We've liked all week long, and for the beginning of the year, Aussie dollar. The great news just keeps coming in. Today we had storming retail sales numbers out of Australia, and an upward revision to the previous number. Metals prices quite strong. It just looks good for Aussie.
Ray, have a good one. Thanks a lot for that. Ray Farris is joining us from Credit Suisse.